If you are in the housing industry, I've got good news and I've got some bad news. I now believe that the housing crash in transactions that we successfully called 4 years ago has 2 more months to play out. I believe July and August will be some of the worst transaction months of this period. But the good news is come September of 2025, to be clear, I believe we start building positive momentum, and that carries us through 26 and 27.
So that's Michael Zuber's channel, one rental at a time. Definitely recommend it. I'll put a link in the description if you're interested in buying and investing in real estate. It's a really good channel. But what's he talking about? He's not talking about real estate prices. He's talking about real estate transactions. And we have fallen 30, 40% from the peak. So what does he mean by crash in real estate transactions? So we peaked out, when rates got really, really low, right around 6.4 million or so in total transactions, according to the National Association of Realtors. We did get under 4 million, but look, really since 2023, we have not budged much over 4 million transactions. I did ChatGPT it because I was curious, and an average amount of transactions that we should have in a normal market is between 5.3, 5.5 million transactions nationally. So we're well below that and way, way off the peak. Now, interesting enough, as far as prices go, and Michael Zuber said this, I've said this, a lot of people have, and I've gotten a lot of arguments over this. People weren't happy that I was saying this, is that the median price of existing home sales would stay fairly flat. And you can see it does kind of go up and down, seasonally adjusted. But in general, really the housing market as far as prices have gone has been really, really flat. So you got really flat prices, transactions that are really, really low. And why is he saying that he thinks that July and August are going to be kind of the bottom, really, right? And then going up from September on is because there's a lot of things that are going to play out throughout the next few months, right? The Fed is kind of taking a wait and see with tariffs. But if we don't so let's see how this is likely to play out. If we don't get a big spike in inflation, which I don't think that we will, but we shall see. And then on top of that, you look at the unemployment numbers staying fairly soft. And at the same time, you've got the current administration, whether you agree or not. I definitely like Scott Bessent, the United States Treasurer. But either way, they're wanting lower rates to refinance this short-term national debt that's coming due. And there's going to be a lot of pressure. In fact, I would be shocked if Trump doesn't name who the next Fed chair is going to be to put pressure on Jerome Powell. So we can take all that into account. We're likely to see lower rates as we go through this year and next year. In fact, if you look at Morgan Stanley here, they're predicting 7 Fed rate cuts by 2026. That's a lot from where we're at now. As far as the market goes, what it's predicting for the meeting in July, they pretty much say there's a 20% chance that the Fed could cut rates. When we get to September, right, it's pretty much agreed upon that by September, we're going to cut the Fed funds rate at least 0.25%. Now, what that means is the market is forward looking, and as the market gets more certainty, they're going to price some of this in before we get there, right? You don't actually need the Fed to cut rates to get lower rates. You need the market to believe that the Fed's going to cut rates consistently over a period of time, and then you're going to see that the Fed, remember, they're cutting the Fed funds rate, not interest rates, so you see interest rates react to that and go down. It's going to be really, really interesting to see how this next 60 to 90 days plays out, and do we really hit kind of the bottom? Because I can tell you, predicting the bottom of transactions, right? The rates were going to go up, and like this month and the next month, the end of this year, I predicted it 3 different times that I thought rates would start to come down. Well, it's kind of felt like this. So feeling like you're getting hit in the head and whack-a-mole is exactly like predicting rates, because it is so hard to know. But it finally does seem like to me, when you look at all the pieces of the puzzle, barring some crazy black swan event, which could happen, we're about to get on a rate cutting cycle, and we are going to have lower rates. And if we did not get a lot of price correction with really rates hitting for a brief period of time 8%, it's likely that that's not going to happen. In fact, we have a fair amount of transactions out there now. And if rates drop, that's a good runway to get a healthier market, because you still got to remember there's pent up inventory of people that got really, really low rates that if rates fall some will be more likely to put those houses on the market because they need to move. And you have a lot of pent up buying demand, people waiting for lower payments. Now, have rates really falling meaningfully, lately, even with some of the political stuff? This says the average is 6.72%. This is Mortgage News Daily. Everyone's rate is different. I like to just look at the trend. And look, you can see we have got this trend down, which is good. The real question is, can we break through this 6.5%? Right? Every time we've gotten close to this, we've bounced right back up. And I think that at least for now, that is not going to change. I don't see anything changing structurally, especially with what Jerome Powell's saying about wanting to wait for inflation to see what happens with tariffs. So I think we're going to see rates about where they're at through this month, probably to August, and we'll see as we get closer to September what happens. Now, one other thing, just to switch gears, I thought this was an interesting article from KB Homes. Actually, the article's from Resi Club talking about KB Homes, and they're talking about KB home buyers risk finding themselves upside down if they overpay for builders' incentives. And I'm going to link to the article, though this may be where you have to pay Resi Club to see this, so you may not be able to see it. But when you look at what they're summarizing here, they make a really, really good case of what they're saying, which is that KB Homes has been focusing on lowering the price, right? The reason builders don't want to lower the price is because they've got all these houses that they got to get out of the ground. So what KB Homes is saying is, builders are good at selling payment, which we all know this if you're in the industry, and keeping the payment low, but keeping the price where it's at, meaning that you get these incentives, but KB or the other builders don't have to lower the price. So really, really interesting article. And I do see this to be true. Builders are getting more for their houses, because really the action to me is in the resale market right now as far as price, right? Getting a better deal on a house is most likely going to happen in the resale market, not with a builder, but you are going to get a lower payment with a builder. You're just going to pay more for the house. So that's kind of what they're pointing out there. So we're going to watch, we're going to pay attention, because we are going through a crazy time with tariffs. We're going to see what happens with the markets. Stock market's booming right now. I believe that we will get a Fed cut by September, and then we will be on a slow rate cutting, and then that will pick up in 2026. So that's what the data says now. We'll keep tracking it. I did a video on the 1% loan program. I'm going to put it in the description. Hometown Heroes is likely to come out. If you're looking for a lender that communicates well, super transparent, does what we say, and more importantly, I answer my phone. So if you have a question, need to get a hold of somebody, call me personally. It's just Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week, and I'll talk to you soon.